Good morning, everybody. This is the live market open for Thursday. It's April 14th. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing this show as usual for FX Street. I see quite a few of you in the room, in the chat. So we'll talk about recent developments in markets. We're seeing a stronger dollar in general. Various charts and levels, we'll cover that. Talk about the next 24 hours, and of course, looking forward to your questions. If you cannot see the chat box alongside the screen, alongside the video, please go to the address here, klk.io/fxrate-forex-live-video. So what's going on in markets? Well, the dollar is moving higher, and the dollar is moving higher not because figures are better. There's more of an atmosphere that things could have been worse regarding retail sales, because there's no talk of a recession. Markets got used to terrible figures, and they were just not so good, but not terrible. And there's also some repositioning after big dollar sell-off. Finally, we're seeing some significant breakouts, and things are moving. Okay, another thing that cheers markets this morning is that Singapore, the Monetary Authority of Singapore, announced more easing, and there's speculation that other Asian central banks, such as the big ones in China and Japan, could introduce more monetary stimulus. That, of course, weakens their own currencies. We've seen the Singapore dollar slide quite a bit, and perhaps other currencies will slide as well against the US dollar. Now, all Asian stocks are up, and that's also a positive mood. Yeah, so let's talk about the events we had yesterday, and then show a few charts. Okay, so yesterday we had, well, this minor disappointment in Eurozone industrial output. Output missed with a drop of 0.8. Okay, but that was not that significant. The big event that I mentioned yesterday was retail sales. It did disappoint. We had most figures missed by 0.2, but we had some positive revisions worth 0.1. I still see it as a miss. Revisions are less important than the current situation. We did have one of those core figures. Remember, there are three core figures. One is we have the headline figure, we have the core figure, we have the control group, and we have the figure excluding gasoline and cars. Okay, so at least the one excluding gasoline and cars enjoyed a significant upwards revision. So it wasn't all that bad. I still see it as a negative report. Also, producer price index missed on all figures, monthly, yearly, core, and headline. All in all, the data wasn't good, but the momentum that already began beforehand with the stronger dollar was seen. It extended. Okay, I can share the exact figures, but let's continue with well, crude oil inventories more or less as expected, but there was one anecdote there worth mentioning. The level of production dropped in the United States just under 9 million barrels per day. So it was a very small slide in the bigger scheme of things, but this loss of the symbolic 9 million barrels per day level sort of helped a bit oil prices and kept optimism in the air. Of course, we'll have the Doha meeting on Sunday and lots of speculation. Will they, won't they? Will they implement, won't they implement? We can talk about that as well. Later on, the Bank of Canada. The decision was relatively optimistic. Let's talk a bit about that. We had the Bank of Canada didn't change policy, of course. They left the interest rate unchanged at 0.5. They did upgrade the growth forecast for 2016 from 1.4 to 1.7%. That's, of course, good news, but it wasn't that surprising because we already know that the government announced a new fiscal stimulus plan. So it makes sense for the Bank of Canada to raise forecasts depending on this government spending. In 2017, they reduced the growth forecast by just a bit from 2.4 to 2.3. It was expected that they'll upgrade growth forecasts. What we did also hear a bit is some, well, very, very minor complaint about the strength of the Canadian dollar. They see well, Canadian dollar certainly helped the Canadian economy recover. I mean, balance the drop in oil, in oil prices. But now when the Canadian dollar is much, much stronger, okay, 1,900 pips in dollar CAD off the highs. So we're seeing some Bank of Canada, of course, worried about this as a downside risk. The job owning from the Bank of Canada is nothing in comparison to other central banks. But just mentioning it shows that they are worried, because they know that it did help. The weakness of the Canadian dollar did help the Canadian economy. And now the strength of the Canadian dollar is, of course, a risk, as they describe it. Okay, let's continue. I already see a few questions. Yeah, we had the Fed Beige book. It was more or less steady as she goes. Also, not that terrible. They're not very worried about the economy. Most districts are growing at a modest to moderate pace, slow and frustrating, or steady and stable, depending on the way you want to look at it. The US growth rate, the Atlanta Fed's GDP now was revised, but it remained on positive ground. Still no flashing red headlines of recession, so it remains positive. Australian employment released overnight was slightly better than expected. Also here, there were a few caveats. I mean, the economy gained 26,000 jobs, but on the other hand, most of them, part-time jobs, 34,000 part-time jobs were added, and full-time jobs were actually lost. The unemployment rate surprisingly dropped to 5.7, but the participation rate didn't change. It was expected to rise. Anyway, this was more or less, well, bottom line, it was a bit better than expected, but not really not a blockbuster one, okay? And the Australian authorities said that growth has slowed down just a bit. The uptrend in the Australian labor market has been strong in 2015, late 2015, and in 2016, it's not as strong. Okay, I see a few questions. Jax, Yohay, can you tell me the S&P was not intervening yesterday? I do suspect they were intervening. We'll look at the charts in a second, where you've seen that euro-dollar dropped again. Well, dropped in general. The euro dropped also against other currencies, such as the pound and the yen. But surprisingly enough, it did not drop too much against the Swiss franc. So yes, I do suspect. Another thing, what do you make of the RBNZ rate leak? Scandal makes June cut more likely? No, I don't think. Well, of course, it's interesting to hear what the RBNZ does, and also the Fed, and also other central banks, also other government agencies. When they release data, they bring in authorized reporters to this locked room, the lockdown room. They brief them on the data before we know it, but they're not supposed to publish it. Okay, it's under embargo, and so they have all the data. They have all their articles ready to publish, to hit publish when they're allowed to do that. Okay, but there was some kind of leak from one journalist. We don't know who it was and from what news agency in New Zealand. Anyway, the Bank of New Zealand conducted an external investigation by Deloitte, and they found that there was a leak. Okay, they did not see an effect on markets, but nevertheless, they are very disappointed. That's what they said. So they decided from now on not to allow any lockdown. They'll just publish the announcement on the website and then do the press conference. So basically, it provides a level playing field for everybody. No journalist, as the most loyal journalist, even cannot have early access. So that's what they decided. Regarding the impact on rates, I don't think it'll have an impact. I think it'll have an impact on market movements, because it'll take markets more time to react to the news. So maybe if we see the New Zealand authorities release, the RBNZ release the rate decision at, usually it's 9 p.m. GMT, if I'm not mistaken, depending on the time zones. Anyway, 9 GMT, we'll see the market, and usually we have an immediate reaction. Now we'll see it in a few seconds delay. Okay, because it'll take time for the news agencies to pick it up. A few seconds, yeah, but and then to publish it on the wires, and then for the algorithms to move. Okay. Yeah, throw the fundamentals out of the window yesterday. I guess your comment is related to the retail sales. The retail sales is which was disappointing, and the dollar still strengthened. I see a few reasons for that. First of all, we had some positive revisions, especially in the ex-gas, ex-auto. Secondly, US GDP now, the Atlanta Fed GDP now didn't fall into negative territory. The beige book was also positive, so the other figures released yesterday were also positive. And perhaps more importantly, there was already a trend, a repositioning in markets. US dollar began recovering. Remember, the big breakout of euro dollar began during the European session. Okay, dollar yen made the break above 109 in the European session as well. So I see this as we had a prolonged period of US dollar weakness, and now we're seeing profit taking, repositioning, short covering. That's my explanations. Okay. It didn't work out as expected. I mean, the initial reaction to the retail sales report was indeed a slide in the US dollar, but that lasted, don't know, half an hour, 45 minutes, and then we had another wave of dollar buying. Okay. Why do you think the Kiwi tumbled on the news? I think the US dollar is strengthening across the board. The Kiwi didn't have any motivation to, was no motivation to buy the Kiwi. In contrast, there was motivation to buy the Aussie because the Aussie was doing better thanks to the jobs report. Also, the Canadian dollar is sliding. No, it's not only the Kiwi. Yeah, okay. Yeah, retail sales, odd employment. Well, the Australian employment report did support the Aussie in comparison to its peers. Okay, we had enough, I was talking already for 12 minutes without showing any chart. So let's begin that. Okay. But certainly love your questions. Okay, we are seeing an extension of the euro dollar slide, losing another line, losing the 112.50 line. The low so far 112.36. Okay. So we finally had a break out of this very frustrating range. I must say I'm very happy. I don't like the frustrating ranges of euro dollar. We're now under next support line is 112.15, and the next one, let's add a line here. Well, I must round here at 111.50, followed by 110.70, which is a stronger line. So euro dollar fell out of bed, fell out of the high range, so it's backing down, still above the levels that the ECB would like to see it. Still, well, here's the ECB action, the ECB action regarding, of course, the press conference by Draghi on March 10th, and the fall and then the big rise. We're still way above this line. Of course, we had lots of dovishness from the Fed since then. Anyway, euro dollar is sliding. Pound dollar, finally, well, this renewed strength of the US dollar finds a weak pound, and the pound now, especially this morning, is accelerating its losses. We have a decision by the Bank of England later on in the live coverage. I'll post some, I'll do a preview of that soon. 141.10 is the current level. We already dipped just under 141. 140.50 remains very strong support, followed by the round level of 140. 141.75 is resistance. Dollar yen, also here we can see some US dollar strength. We had it capped under 109. 107.65 was the low level. I'm sure the Japanese authorities are happy now. This move by Singapore raises the chance of some action also from the Bank of Japan. I mean, in theory, at least, according to speculators in Asia. So, yeah, we're currently close to the highs. The highs for today, 109.54, and currently 109.47. Resistance is at the round number of 110. Okay, dollar CAD. Look what's going on here. Well, this goes, the Canadian dollar is sliding. Well, it didn't react too much to the Bank of Canada's decision because on the one hand, they did raise growth forecasts for 2016, but cut them for 2017. They did talk about the Canadian dollar as a risk, so it was optimistic, but still balanced. Now we're seeing a fresh weakening on this global US dollar strength and a fall also in oil prices. As usual, we have the speculation about oil prices, about the Doha meeting. OPEC and non-OPEC members are meeting on Sunday. We've seen yesterday attempts to move higher. We did move higher. We did break above the previous highs, went above $42 per barrel on WTI crude oil, and Brent followed suit. But now we're seeing a slide, perhaps some pessimism about the real intent of, the real expectations from that meeting. Okay, so we're seeing oil sliding, and the same goes for the Canadian dollar. Resistance at 129.30, 128.30. Look, still works as a separator of ranges. It was a strong line, both as resistance and as support back last year in 2015. Anyway, the new support line 127.50. So the wide range is 127.50 to 130, with 128.30 and 129.30 in the middle. All right, the Aussie dollar, look, it is sliding just a bit. So you can see it is defying fundamentals, but the slide here is minimal in comparison. Okay, 0.14% at the moment. And the Canadian dollar, 0.57. And the Kiwi dollar, wow, that's quite a fall, 1.27. Anyway, looking at the Aussie dollar, it's a bit more choppy. I have to redraw lots of lines here. I can only say that resistance 77.25 worked perfectly well. On the downside, we have 75, and in the middle, it's quite messy. Okay, speaking of messy, I was disappointed by Lionel's messy performance last night. Barca is out of the Champions League, lost to Atletico Madrid. Going back to Forex, yeah, it's a bit choppy, perhaps some support at 76. Okay, Kiwi dollar, yeah, big fall, 68.30. Holding on to the 68.20 line, it failed to break above 69.80 when things looked better, and now it's collapsing. I cannot see the correlation again between the leak scandal and the rate cut, but anyway, the Kiwi is a bit vulnerable this morning. Okay, yeah, no, I did not have money on the game. I just live here. I'm a fan, well, not very dedicated fan, but I watch the big games. Yeah, Barca out of Champions League is causing the euro to tumble. The Messi trade. Yeah. Well, they say that Messi is a bit out of focus because he's also implicated in the Panama Papers, the same like the president of his country, Argentinian President Macri, is also implicated, but also quite a few Spanish politicians in Madrid, in Barcelona, well, everywhere. So maybe that's not the real thing. As you say, Messi, I think I never saw a match without Barcelona score even a single goal. Yeah, I was also quite disappointed. They were putting some pressure in the second half, but I must say they weren't really that close to scoring a goal. Yeah, they're out. I still hope they win La Liga, the Spanish league. Anyway, after such a great season last year when they took the triple, maybe this year they're a bit, they're not hungry. So let's go back to foreign exchange. Talked about Kiwi. Let's talk about the Swiss franc. Dollar Swiss is moving a lot higher. Okay, now this can be attributed to the strength of the US dollar. We made a move above 96.40, and now it turns into support. Next level of resistance is 98. But as always with the Swiss franc, the more interesting currency pair is Euro Swiss. So we did see, well, now we're back to the same range. Anyway, we did see Euro Swiss rising yesterday, all right, or overnight. Let me take a closer look. Yeah, more or less overnight at the same time as the euro remained weak. Anyway, Euro Swiss at least didn't fall. So I suspect that the Swiss National Bank was on the markets maintaining a weak Swiss franc in light of this dollar storm. Okay, yeah, and as Sinatra mentions, the dollar index is back in the 95 region. Dale Pinkert of the afternoon show, Morning in the United States, is an expert on the dollar index. Suggest you follow him for detailed analysis. I see the dollar index is mostly related to the the euro. I like the excitement of two currency pairs anyway, but we can certainly talk about the dollar gaining strength across the board. Euro pound, we found, well, very nicely, it found support at the levels we've talked about in the past, 79.30, which was resistance here, not so much here. Okay, so back in late February, it worked as resistance. Now it works as support. 81.20 is high resistance, and 80.20 perhaps is the next line of resistance. We had the pound showing some strength. This may be over for now. The political events are all playing against the British pound. Okay, so I remain bearish on the pound. That means bullish on euro pound. Okay, anyway, these are the lines to watch. Euro yen trading a bit more in tandem. The ranges are a bit narrower than they used to be. So it's 123 at the moment. It's the dollar against the rest in many cases, so the ranges are limited. 123 works just now as support, and 122.50 is the next line. Resistance at 124.20. And the dragon pound yen, well, we did have it fall to new lows of 151.80 more or less, and then it recovered and the better mood in markets. I mean, the pound was looking better. Now the pound is not looking good anymore. The fundamentals, well, inflation did come out better than expected this week, but the worries about Brexit are here. Okay, so 154.66 is some kind of resistance, followed by 156.60, support at 151.80. All right. Okay, we talked about oil. Let's take another look at euro dollar. Continuing its slide. Yeah, so it's a broad dollar strength that began yesterday, late in the European session, continued into the US session, and extends today a bit in the Asian session, but mostly now along the show. Okay, what do we have today on our agenda? We have the Eurozone Producer Price Index at 9 GMT. That's 10 sorry, in the UK and 11 here in the old continent. Let's look what we're expecting. This is, of course, the FX rate calendar on Forex Crunch. So, oh, why did I put only the PPI? Sorry for the confusion. Let's talk. No, it's the CPI. Anyway, sorry for that confusion. Anyway, what we're looking at today. Let me just check I'm not wrong. Yeah, sorry, it's the final CPI, not as important as the initial one, the preliminary one that was already released. But there are revisions here. It's quite common to see revisions. Okay, so month over month, yeah, we're expecting 1.2 rise. I think it's a bit less important. And the core, we don't have expectations for the core. Basically, markets are expecting a confirmation of these figures. So it's 1% on core CPI, which is a bit higher than in previous months. And the headline CPI is at minus 0.1. I don't have a specific bias on that. We have the ECB having its rate decision next week. But this is a rate decision without new forecasts. And more importantly, just after the previous one in which Draghi introduced a huge stimulus package. So a tick down or up in inflation figures should not have any effect on markets, okay? But still important to watch this all feeds into the next important meeting that is in June, and could still impact the euro if it's, of course, rises, the headline figure rises from minus 0.1 to positive figure, or just even flat. It's sort of a bit encouraging. Or if core inflation rises, it's also encouraging. If they both fall, ECB will be frustrated. At least they might expect a weaker a weaker euro. Okay. Yeah. Do you have a view on stocks? Pretty key levels, especially in the US. And no, I don't follow stocks too much. I know that profits are not as good as they used to be. Bank profits are not looking good. Tech companies are very rich, but they don't spend enough money, and they don't pay enough tax in the US. So in general, there is some worry in markets about corporate profits, okay, that aren't as good as they used to be. Not everybody beats the street. Let me just look at the S&P. Actually, it's moving higher. Basically, I see it as in range. It's in range for quite some time. I remember these levels. Yeah, so we have more or less the same ranges since in a year now. Okay, so if we look at the bigger scheme of things, we had these falls to 1800 on the S&P. Now we're on higher ground, but I doubt that we can break above this 2140 level. So again, I don't follow stock markets that closely, more as an indicator of the mood, but still worth watching. Noting the mood in Asian stocks sometimes determines the European Open until European stocks get into play. Okay, and of course there is a correlation between stocks, oil, other commodities, and currencies, of course. Anyway, I'm not that optimistic on the US stock market. I mean, can go up, of course, but not. As far as I know, there are some worries about corporate profits. Anyway, we talked about the Eurozone CPI, the final figures. Fixed at 11 GMT. We have the rate decision in the UK and the meeting minutes, which are more important because we're not going to have any change in forecasts. In the interest rate. The same 0.5 interest rate is with us for already, how long is that? 7 years. Okay, since March 2009. But still a few things to watch. First of all, until a few months ago, we had one member, Ian McCafferty, voting for a rate hike. Afterwards, he changed his mind. No changes expected in the voting pattern. It's expected to be unanimous, 9-0. There is, of course, a chance that we'll have maybe one member voting for a rate cut. Okay, I don't know who, but the atmosphere in the UK is a bit more negative. There was a poll yesterday. One of the things that also weighed on the pound just a bit was the poll of economists. They said that if the UK decides to leave the EU, the Bank of England could cushion the fall, could support the economy by cutting interest rates to even lower ground. I don't know how much that will really help, but that's an option. I'm sure they will talk about the dangers of Brexit. They're supposed to be neutral, but they're not really neutral. They don't want the UK to leave the EU. That will cause a lot of headaches for them. So let's see how much they dive into what critics call Project Fear, warning about Brexit. So that will be interesting to watch. And for the pound, well, the level of worries about Brexit, as I mentioned, the path of inflation, the path of growth, if they're more positive, optimistic, it's better for the pound. I believe they'll be dovish, pessimistic, seeing lower growth, frustrated about inflation, worrisome about Brexit, you name it. The pound is already vulnerable. If they hit it hard enough, maybe we could have it break down. Anyway, I invite you to a live coverage of the event. I even prepared the link in advance. I'll be doing it alongside Valeria Bednarik of FX Rate and Mauricio Carrillo. Also a fixed rate. So here's the event. We'll begin at a quarter to the hour, a quarter to 11 GMT, which is a quarter to 1 here in Europe, and a quarter to 12 in the UK. Okay. Afterwards, we have important figures in the US. The inflation figures. Remember last time we had the inflation figures released on the same day that the Federal Reserve tweet that too. Sure. Okay, I'll do that. Anyway, we had great inflation figures last month. Tweeted. Okay, so we had better than expected inflation figures in the US on the day the Fed made its decision, and then in the decision they still warned about inflation. Do they know something we don't? Anyway, the key figure to watch is year-over-year core inflation. The Fed cares about core inflation more than anything else, so this is something to watch out for. It was a 2.3, which is quite healthy. Remember, the Fed also looks at the core PCE price index. So anyway, this is the key level to watch. Also, headline inflation will be watched, expected to rise from 1% to 1.2. And of course, the monthly figures are also worth noting. We did see PPI yesterday, producer price index, miss expectations. So maybe we'll have also some kind of a disappointment here. Maybe the Fed knew what it was talking about. If we do have a positive surprise, inflation could give another boost to the US dollar on tightening expectations. We just look at the figures yesterday regarding the yesterday was Wednesday, so we had the figures right here. As you can see, all the figures released yesterday, retail sales, PPI, they all missed expectations. At least there were some positive revisions in retail sales. So if we look at this one, it was revised a bit to the upside. Anyway, PPI missed yesterday. It rose 1% instead of 1.3 year over year. The core PPI, so this for me lowers a bit expectations for the CPI. Okay, today we also have at the same time as usual, every Thursday, we have the jobless claims in the United States of America, and they're expected to rise just a bit from 267 to 270. Shouldn't rock markets too much. The inflation figures are, of course, more important. All right, let's continue. We have a few more. Yeah, Jerome Powell of the Federal Reserve will speak at 2 p.m. GMT. I think I would say he's a bit more neutral, not really a dove, not really a hawk, doesn't really talk a lot about monetary policy anyway. So if he says something significant, it could be a surprise. I mean, it could move markets because there are no expectations. It's not like Bullard that we're expecting him to be a hawk, and then that's what he does, or Dudley, which is a dove, and that's what he does. Anyway, and last but not least, late at night at 2 a.m. GMT, we have China, the Chinese GDP figure. Okay. So the world's number 2 economy releases the growth figures for the first quarter. Of course, nobody fully believes the data. We already know that the data is a wild estimation and also serves politicians. We know, I read research in the Financial Times, I think that, or The Economist, that there is some kind of correlation between the provinces that report correctly the birth numbers, okay, and the GDP growth. There are some provinces, I mean, heads of provinces, if they want to get a promotion, they want to show the party, the Communist Party in Beijing, that they're working doing well under one-child policy, which has been now loosened just a bit. But anyway, on the one-child policy, so they cheat on those numbers and then they get a promotion. And these provinces, there is also a tendency to cheat also on GDP numbers. Anyway, this is just an anecdote. Anyway, even though markets don't believe it, even though there are other measures like electricity, cargo rail, I don't know, lots of other measures to, and of course trade balance that we had this week, which is harder to cheat on because it's trade with other countries as well. Anyway, it doesn't matter too much that the numbers might be invented or an estimation or serve political interest. This still moves markets, okay? So it has a big impact as the world's #2 economy. The Fed warned a lot about China, even though it wasn't that justified. China carried the torch of economic growth after the financial crisis. Everybody's looking at this figure. So let's look at the data. I don't see expectations here on the chart. You've seen on other calendars expectations of 6.7% year over year. Last time it was 6.8. Remember, the target of the Chinese central government, the committee, is a range of 6.5 to 7. So I don't see it falling under 6.5 in any case, just because they told us so. Okay, so if it'll be 6, I think if it'll be closer to 7%, it'll be better than expected, supporting the Aussie dollar and keeping markets cheerful. If it'll be lower, it'll weigh on markets. Okay, at the same time, well, we have the quarterly figure, which is not that important. We also have quite a few other figures released. Retail sales. Remember, China wants to move from investment and manufacturing to consumption and services. So let's see if the retail sales levels continue to rise at double-digit figures. They're expected to rise 10.4 instead of 10.12. Industrial output, also very important. This part of the economy is supposed to slow down, but they don't want it to slow down too much. So last time we had sort of a worrying figure of 5.4% growth year over year. This time a level of 5.9 is expected. Also important. We have other smaller figures, the urban investment, a level of new loans, which is expected to top 1 trillion yuan. Foreign direct investment. Yeah. As always with the big bulk of figures, we will need to see all figures go in one direction, either positive or negative, to support to have a more meaningful market movement. Industrial production is specifically important for China because of for Australia, sorry. So Chinese industrial output is important for Australia because of Australian exports, Chinese imports of commodities, of metals. But in general, this will shape the whole market mood. Okay, a few comments here. Okay, thanks, Inara, for coming. Thanks. Yeah, Jack said that's great. They just make the numbers up. Yeah, and you shared here with us. Yeah, so yeah, that could be a nice approximation of the numbers. Okay, it's a cartoon joke here, of course, but yeah, everybody knows that they make up the numbers, but it remains of high importance. Okay, all right, so I think we talked about everything. It's time. Thank you very much for the questions. Time for the wrap up for today. So this is the wrap up for the live market open for Thursday, April 14th. The market mood is positive, stocks are rising, and the dollar likes it. It's a repositioning after many long days of dollar sell-offs. And a reaction, sort of, it could have been worse reaction to the retail sales numbers, which weren't that good actually. there was no talk of a recession, so yeah, that could have been worse. Anyway, specifically in Asia, we have Singapore surprising with an easing of monetary policy. The Singapore dollar slides, and there's speculation about other Asian central banks. And yeah, stock markets are up. Yesterday, we had a miss in industrial output in the Eurozone, but it wasn't that important. As I mentioned, retail sales in the US did disappoint, but there were some positive revisions, some silver linings. Not good enough, in my opinion, but the market probably expected something even worse. PPI, Producer Price Index, missed. That could be a hint for for a miss today on the CPI numbers, but you never know. Last time they beat expectations. Crude oil inventories came out more or less as expected, and we had that symbolic drop under 9 million barrels a day in US production. The Bank of Canada was optimistic about growth, especially this year, a bit less about next year, and they did warn about the Canadian dollar. The Canadian dollar is sliding, mostly on the strength of the US dollar and also oil. The Fed beige book also contributed to a positive atmosphere because there were no negative surprises. There are no big warnings from the Fed. These are the figures that the Fed has before its eyes towards the next decision. And Australian employment came out slightly better than expected. Not perfect, but it helps the Aussie mitigate and counter the US dollar storm. Let's look at charts. Euro dollar this morning extending its slide. The slide began before the US figures yesterday. It began in yesterday's European session. Now we're seeing an extension, an attempt to move under 112.50. The next line of support is 112.15, followed by 111.50. Resistance at 113.35, which was the bottom of the previous range. Pound dollar resumed its weakness, falling quite a bit. 140.50 remains very strong support, followed by 140. 141.25 is some kind of resistance, but more significant cap is at 141.75. Dollar yen rising after it made the break above 109. The next level to watch is 110. Currently, we're stable. Okay. Dollar CAD, it couldn't break below 127.50, and made the move back above 128.30, which was a very strong line in 2015. Next line of resistance is 129.30. Oil prices are now stabilizing above 41. We'll have lots of headlines from Doha regarding the Doha meeting on Sunday. The capital of Qatar will see a meeting between Russia, Saudi Arabia, Iran, and other oil producers. There's a 50-50 chance, according to the last headline I read, about getting an agreement to freeze. I have lots of doubts if they will actually reach an agreement. Perhaps if they don't reach any agreement, oil will collapse on Monday. Even if they reach an agreement, the proof is in the pudding. Implementation could be hard. We'll talk about that, of course, tomorrow and on Monday as well. So the Australian dollar, looking a bit better at the moment, up on the day, very, well, marginally higher. Yesterday, it made a move towards resistance at 77.25 and couldn't make it. Some support at 76. The Kiwi dollar staging a fall. There was the Reserve Bank of New Zealand reached the conclusion that in the previous decision to cut, there was a leak, and they decided not to share information with journalists anymore. I don't see the correlation between that and the fall of the Kiwi. It's more of the US dollar strength, but if you have any other explanation, I'll be glad to hear. Anyway, 68.20 is support, working very well for now. 68.80 resistance, further support at 67. Okay, events for today. I once again invite you to our live coverage of the Bank of England. That's at 11 GMT. I believe they will be dovish because of the Brexit danger and because the UK economy might be slowing. Let's see, the biggest surprise could be that one member even votes for a rate cut. That's more likely if and only if the UK decides to leave the EU. Before that, we have the final CPI figures in the Eurozone at 9. No changes are expected. Remember, we already had the preliminary numbers out, so these are the final, less important figures. I mean, the release is less significant. At 12:30, big event probably for today. Is the U.S. inflation data. Core inflation, most important figure, is expected to remain at 2.3. I suspect because of the PPI release that it could be a bit softer. We also have the weekly jobless claims expected to remain more or less the same at good levels. The U.S. labor market is looking okay. Jerome Powell talks at 2 GMT, Federal Reserve member. And in the middle of the night, Chinese GDP, industrial output, retail sales, a big bulk of Chinese data. It doesn't matter that everybody casts doubts. What matters is what they tell us and how the market reacts. 6.7, 6.8 is on the cards for GDP. But remember, figures need to move. Because we have so many figures at the same time, we'll need other figures to move in the same direction, either positive or negative, to have an impact, first and foremost on the Aussie, but also on the general market mood. Currently positive, but it could change as well. Okay, so that was a long wrap-up for a long show, because we had lots of things to talk about. The week became calendar became much busier in comparison to the beginning, to Monday and Tuesday. Another question here. If CPI comes in weaker like PPI yesterday, that could take the wind out of the dollar. Yeah, because we had around 24 hours of significant US dollar strength across the board against majors, minors, safe havens, risk currencies. So maybe after this wave, we'll be reminded why Janet Yellen was dovish and that the Fed is in no rush to raise rates. So if we'll have a significant miss on the CPI, let's say 2% in core CPI instead of 2.3 expected, that would sort of cast doubts about the pickup in US inflation, which is source of concern for the Fed. Okay, so that's it for today. Thank you very much, everybody, for coming and for the great questions. I wish everybody success and see you tomorrow. Thank you and bye-bye.